All right, this is your breakout watch list from July 31st to August 4th. In this video, I'll be covering the top 10 swing trading setups from the long side going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead up trends. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. Here are the 10 setups that I'll be covering in today's video. As you might notice, they're across a bunch of different industry groups, and that just shows how strong the market is. Every time the market seems like it's about to pull back, it just rips higher. But enough chit chat, let's jump to MarketSmith and start breaking down these stocks. The first stock that we'll cover is ABCM. This is a UK biotech stock. Biotech's the 59th strongest group out of 197, but you'll always be able to find a couple setups in the biotech group. But this is a setup that I've actually been watching for a while now, rallying from $15.70 up to $25, around a 60% gain there. Since then, we pulled back into the 21 EMA on Wednesday of last week and had a really nice shakeout day on Friday where the lows undercut not only the lows of the secondary pullback, but this initial pullback low as well. So it shakes out all the weak hands. We close right in the upper 5% of the daily range, back above the 21 EMA, just under the 8-day EMA. So with this, I'm looking for a break over Friday's high, 2354, and a stop under the lows here. I'll probably get my stop under $23, $23.97, something like that, but I won't give it the entire low of Friday's candle, just a little too wide of risk there. I want to keep my risk a little bit tighter for biotech stocks. So that's ABCM. The next stock that we'll cover is the very popular IPO stock, CAVA. It's in the retail restaurant group, which is 40th out of 197. Another IPO stock in that same group is GENI, looking very, very similar. So the fact that we have two stocks in the same group, both IPOs, looking like they're about to break out, gives me a little bit more confidence in the setup. One thing I want to point out with CAVA's daily chart before we go to a 30-minute chart is the shakeout on Thursday, undercutting $50. It did shake me out as well because I didn't have any profit going into the next day. I got my entry on, I think, Monday, the 24th at $50. So I was shaken out of this, and then it gapped up, rallied right up to this downtrend line that we can see when I bring up the 30-minute chart, switch to temporary line pen, and you see a nice clean downtrend line to work with. Now, if we open up weak on Monday and we start to trade sideways a little bit, we can get a lower entry point later on in the week. But for now, I'm looking at $53 for CAVA just on that downtrend line. Next, we have the energy drink company, CELH. Had a really nice, not quite a double bottom base since the low here didn't undercut the previous low here, but nice base, breaks out on above average volume, 344% earnings per share growth, 95% sales growth, 16% after-tax profit margins, pulls back to the 21 EMA, starts to rally, and now we're pulling back to the 50-day moving average for the first time since we started this gap up here. So typically the first time you come into the 50-day moving average, that's a line in the sand for institutional investors to either add to their positions, or if you see a break under the 50-day in continuation under the 50-day on above average volume, that's a big warning sign to get out. But until we see that break, I'm kind of treating this 50-day moving average as my stop loss. And we had a really nice tight price action on Friday, inside candle there. I'm just looking for a break over Friday's high here, 149.06, and then getting my stop under, maybe having to do a split stop, some under Thursday's low, or Friday's low, 8 and the 21 EMA, also right at that action at 145. I'll probably call it 144.90, something like that. And then another half of the stop loss under the 50-day moving average for CELH. Next, we have the sports gambling site, GENI. This is one that was on the breakout watch list last week. I did trade it last week. Still have a few shares, but looking to add to it. This is another high volume move, not on earnings, but very strong move, very strong closing range. From there, we rally up a little bit, eventually undercutting that. But on Thursday's action, on Thursday's sell-off down 5.5%, the low of the day, 730. The closing range, the high volume close, 730. So that's a really important level to watch right there, especially if we get market weakness. This coming back into 730 and the 21 EMA would be a really nice spot to manage risk against, potentially just the low of this pullback at 716. So 2.5% risk if you get in around 730 there. That's the type of risk reward that I'm looking for GENI. We got one more IPO to talk about. That's IE. This is in mining and metal and ores, 130 out of 197. Not the strongest group individually, but When you have an IPO looking like this, trading right at the top of the daily range with no natural sellers above, that's a name that I look to try to trade for a performance booster at the very least here. Really nice price action Wednesday, Thursday, Friday, after a Tuesday rally up back above the moving averages here after a shakeout on Monday. Strong closing range, up 1.6% on Friday. This is, again, one that I'm just taking on strength over this 3-day pivot around 1625, getting my stop loss under the low of Wednesday, call that 1565, and just managing my risk there for IE. Next, we have a Brazilian banking company, NU. This is one ran from $3.39 all the way up to $8 and has been consolidating really, really well. It trades orderly. Outside of a couple whippy days on May 16th, something like that, we pulled back to the 21 EMA and found support generally around that area. We had 2 closes just slightly under the 21 EMA, but not concerning, not on above average volume, nothing like that. So we're just looking for a break over $8 as the potential entry point, and then a stop under the 21 EMA at 767. Nice tight risk on a stock that has had a monster move and is just consolidating nicely. Now, if it does end up stopping you out, I wouldn't take it completely off the watch list because we do have that 50-day moving average coming up. And again, we talked about this earlier. The 50-day moving average is typically the line in the sand for institutional investors. So the first time we come to test that might be an area where you can manage your risk against maybe 2 or 3% under the 50-day moving average. So if you do get stopped out on the initial trade, don't just throw it out of your watch list because it might be setting up for an even better entry in the future. And this next stock is a great example of that because PANW used to be on my leaders list that I post on Twitter at the end of the day, every single day, or X, whatever it's called now. But after I think Microsoft had some news that they were entering the computer software game, this dropped 7% on above average volume, closed at the low of the day, through the 21 EMA, kind of a warning sign for me. But the next 3 days, we rally right back up to that point, start to consolidate, and now we had an inside day on Friday above the 8 and the 21 EMAs. This is one just looking for a break over Thursday's high, call it 250, and then managing our risk under the 21 EMA. For PANW, one that I did take off the leaders list, but it was still on my general watch list, so when it did set up again, I was prepared to trade it. PANW. So earlier we talked about GENI that was on the watch list from last week. RIOT is also making another appearance. This is a crypto-related stock. Had a really nice move from $9 to $20, $9.40 to $20, so 100% move in very, very short amount of time. Since then, we haven't quite pulled back to the 21 EMA yet, but we did have a nice shakeout day on the 24th. Seemed like it was going to get going on Thursday, like everything in the market when everything gapped up. Closed on the low of the day. Then we had an inside day on Friday, up 4%, starting to tighten up a little bit more. The more this tightens up, the better. So I wouldn't be too shocked if we just had a quiet like Monday, Tuesday, and then this starts getting going. That would actually be ideal. But I'll just be looking for a break over Friday's high, 1870 as a potential entry point, and then getting the stop under the low from Thursday, 1744. That's relatively wide. So a couple different ways to play this. You could split that stop half under Friday's low, half under Thursday's low, or look to initially sell a position into any pop so that kind of pays for the additional risk that you took on the trade for RIOT. I got 2 more stocks for you, so if you guys are enjoying the video, please do me a huge favor and leave a like and subscribe to my channel. I do this breakout watch list video every weekend along with other trading related videos. This next stock that we're covering is ROKU. ROKU, monster move on Friday. Highest volume in over a year, up 31%, closing right at the high of the day on 764% the average daily volume. Taking a look at the weekly chart here, you can also see that this does also break into a stage 2 uptrend from the stage 1 base. Really nice VCP action as we consolidated in the stage 1 base, then breaking out on Friday. So with these HVC plays, there's a couple different ways to play it. If we open above the current price, above the closing price, anytime we pull back into that HVC, the high volume close, which was 89.61, you can manage your risk against about 2 or 3% below that area. Otherwise, if you drill into like a 5-minute chart and see where we found support intraday on the pullback, right around $84, that's another area. If we do open lower instead of opening above, if we open lower, say at like $86, $87, and we come into this 84, then getting a position as the stock starts to U-turn here, and then keeping your stop slightly under the area of support, $84 before, call it like 83.30, 83.40, something like that. Another way to manage your risk on a really high power name. Stocks that are heavily shorted, like ROKU, and also that are breaking out into from stage 1 basis into stage 2 uptrends. And this type of market environment tends to have a lot of power, so it's one that's going to be on my focus list going into next week. And the last stock that we'll cover today is SLB. This is an oil and gas. A lot of oil and gas stocks did come across my feed this week, and I think this one, along with NINE, even though there's a lot of overhead on this one, seems to be kind of the strongest of the names. So on a weekly chart, you could see we're right up against the previous highs here. Let's go back to the daily chart. Really nice move above the 200-day moving average. Did so on convincing volume of 235%, the average daily volume, up 8.6%, closing right at the high of the day that day. Then we had continuation up to the previous highs here. It makes sense that you get some turbulence around that high, so anyone who bought up here is finally getting a chance to sell for break even, not having to admit that they were wrong about the trade. But this is starting to consolidate. It might need another week. So this is one kind of like RIOT and GENI. It might be better for next week, but I did want to put it on your radar in case we do get going over the highs here at 58.20, around that area. And just putting the oil and gas theme on your radar as well. So that's SLB. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video and are enjoying the rest of your weekend.